You are listening to ChartingWealth.com's Training in Trends for Thursday, the 6th of August, 2015. Look where we are. We're going to start off with the cues as far as the training goes, and we're going to talk about what we've been teaching over the last several days. We had a big run up in the market. We found no good, safe buy-in points. We waited for everything to turn over, starting sometime on about the 20th. Our MACD never crossed back over, and we're looking specifically at the Qs, the index, one of my favorite index. It is the NASDAQ 100. We crossed over going up on the 19th of July, moved up for several days, and then started moving down, but the MACD never crossed over. We switched over from the 2-day chart to the 4-hour chart, and we saw from the 4-hour chart it came down just like the 2-day chart did. Then it started to bump up. It pushed through our 2-day down trend line, and we talked about a buy-in point right around 111.60, something like that, as it pushed through and crossed over going up on the afternoon of the 30th. Well, that was your buy-in point, and if you bought in somewhere around 112.60, 111.60, it sort of bottomed down a little bit on you, but then zoomed back up today. You're up about $1 now. Actually, in the high today, it was up almost $1.50. It was up to 112.99, 113. So our scheme, our trading rules have worked very effectively. We talked about this over and over and over again. What you want to try to do is you want to trend follow. You want to find a trend whether it's up or down. You want to see a crossing on the big chart on the MACD. You want to wait for the smaller chart, that is our 4-hour chart, to actually parallel the up movement after an up movement, then a down movement, and then when it starts to move back up again to parallel the bigger chart, that is your buy-in point. We called it on the 2-day trend line, and we called it when it crossed over the MACD going up, penetrating the 2-day trend line. Boom. How often does that happen? Well, when it does happen, it means that you've got the possibility of making a positive, safe trade. Now, you might say, hey, am I supposed to do this with real money? Well, let me tell you, we are not a stock calling service. We're an educational service. We're urging you to try these on your virtual trading platform, whether you have a virtual trading account at TD Ameritrade, at Options Express, wherever you might have one. Any of those services, any online brokerage, you can set up for free an online trading account, and you can practice buying the cues, selling the cues. If you're into options, you can buy the option, sell the option. And again, you can do this virtually. So as you learn, it doesn't cost you anything. And this has worked. It worked over the last few days, and it works many, many times. And what you want to try to do is pay attention to this, use this, train on this, and then once you get good enough and you can make your own decisions, do it yourself with real money. So let's talk about what's going on in the rest of the market. Let's start, as we always do, with IYY. We always start with the 2-day trend line. What do we see? Well, we've got a nice trend line moving up. Market was up substantially today. You can see a huge up move all the way up to about 106.60. Let me see here. What was the actual high today? It was 106, 62. The low was 105.75. The market moved up over the course of this 2-day, and again, we're looking at a 2-day trend line. Technically, the market was up 0.36% for the day. We have an up 2-day candle, lots of up movement. The bears were able to pull it down, but you have no downward. It doesn't look like you've got any downward movement. It's hard to see. No, we've got a hanging hammer. There's different names for this, but you've got a lot of up movement and some down movement, but the movement overall on the 2-day candle is up. That is a good sign. You do see that the derivative oscillator is losing some of its power. We do see on our MACD it was getting very close to crossing on the 4th, that divergence got a little bit wider today, but still not real strong. Again, the moving average convergence divergence line. As far as our 4-hour chart goes, it shows you that the main movement was in the morning, and there was less movement, all contained within the green candle from the morning in a red, not quite a doji in the afternoon. Did cross over, starting off the day going up on the 4-hour chart. So both of our charts, as far as the long chart and the short chart, the 2-day and the half-day, those are both are up on the total market. We look at SPY, we're probably going to see something very similar as we usually do, and we do. We see basically the same kind of movement. The derivative oscillator is losing some of its steam, but it looks like the MACD is hanging in there about the same on the 2-day chart. On the 4-hour chart, similar, almost a doji in the afternoon. And again, a doji means indecision, so the afternoon was not nearly as strong as that big up move during the beginning of the day. Technically, the SPY was up 0.33% for the day, and it's trying its best to cross over going up on the 4-hour MACD, but not really. It looks like the lines are laminated right over the top of each other. The Qs, of course, we have already talked about. That was our lesson for today, and we've discussed that already. If you paid attention to the teaching that we did and you did your virtual trade going up, you're looking good right now. We'll talk about how to determine when to get out of that trade or when to sell a position. Of course, one thing to always remember is think about how much you want to make on any trade when you enter it and put in a good till canceled sell order for either half of the amount or all of the amount, and that way at least you lock in some profit in case it never goes higher than the intraday high. We'll talk more about that later. Lastly, let's look at gold. What is gold doing? Well, we've talked about gold since we called a down move back between the 19th and 23rd on the 2-day chart. It has continued to move down substantially, broke through our 2-day trend line back on the 29th, and it's sort of slid sideways and down since then. We started talking about what the 4-hour chart was doing, telling us what to do, and we can see where, just like we talked about, gold has crossed over and has blown through. It's actually pushed through the derivative, the Bollinger Bands. These are the volatility bands. Gold is now moved substantially below those. But what's so curious is we still don't have a crossing going down on the 4-hour chart. That is probably because, yes, the low on gold hasn't even been reached. The low all the way back here on the 24th. It crossed over on the 27th going up. We're still not there at 103.45. So we don't have a confirmed down move. Once you see the MACD crossover, that is where your safest bet would be to see gold go even lower. So pay attention. Gold is very interesting the way it's been sliding sideways. See if it actually can go below the low, which is 103.85. It's now at, I think it closed the day today at 103.96. So it's awfully close to that. Pay attention. If it goes below that, that'll tell you that gold is going to move further down potentially once it blows that floor. Or it may bounce off that and you may see gold start to recover. So pay attention to it. Thanks so much for listening to us at chartingwealth.com. We appreciate you being with us every day. We love to hear from you. Follow us on Facebook and Twitter and YouTube. Don't ever forget about that. We also have a great Instagram account. You can follow us on all those. Love to hear from you. If you haven't already signed up for our newsletter at chartingwealth.com, you need it because you get this review every single day the market is open. Hope the training's been good for you. Please continue to practice. Do your virtual trades. Get better. Get yourself set up to really start making money in the market. God bless. Wish you the best in your investing. From chartingwealth.com.